Mayuresh Joshi also joins us on the show. Mayuresh, what are you doing with the defense stocks, if any, right now? What will be the recommendation? Book out profits or keep holding them on?
Afternoon, Anisha. No, I think the entire element in terms of the structural story for the defense space still looks good because the order books are very much evident in terms of giving revenue visibility over the next 4 to 5 years. Obviously, they have been executing well so far as well. So I think the only risk that probably happens with a lot of these companies is whether they falter in their execution in a few of the quarters going forward, and that might pull down forward multiples if 1 or 2 quarters are not up to the mark. However, even from a valuation standpoint, I think they are not too expensive, not too cheap, so they are lying somewhere in the middle. But tailwinds and structural story still lies intact for these stocks. However, I think from a Markets with India perspective, we are very, very light right now. We'll still like to see over the next couple of days of what transpires on the political front. And therefore, the initiatives that will be taken over the next few days, and specifically in the budget in terms of allocations, are going to be extremely critical. So, again, I think any pullbacks becomes opportunities very specifically on these stocks. Anybody holding probably at lower levels can continue holding, but you should have your risk management practices in place. If your moving averages are getting breached, the nearest moving ones with extremely heavy volumes, there is no harm in booking out on at least partially in some of these names.
Right. Mayuresh, hi, afternoon. Just wanted to understand, where is it that you're positioned when it comes to IT? Today it's a mover, but do you think there is any material trigger on ground per se for investors to look at any of the IT names?
Afternoon, Aisha. So again, I think if you look at large cap and mid cap has done phenomenally well over the last few quarters. Again, in the quarter gone by, results were stunning for a few mid cap companies. The expectations in terms of US dollar growth, constant currency growth was good. They had decent margins that they reported. Order books were decent as well. And the management sound very, very confident and optimistic on all these parameters put forth. Now, if one really expects the US economy to stay where it is, and the reports that we get from our weekly interactions with our US team, is that the US economy is doing reasonably well. So, to that extent, any rate cut, one in the best case scenario, two would be very, very optimistic. But if these rate cuts start coming through, BFSI, retail, manufacturing will benefit. And therefore, I think order book should start coming back. There is a huge scope in terms of AI, generative AI, cloud computing, data centers as we speak. And therefore, I think our company should benefit over the next 2 to 3 years if one really has that kind of a view. So I think we are keeping our watch list ready for this sector. At this juncture, I think large caps probably look a better bet, both in terms of the placement as well as valuations. And therefore, stocks like Infosys, HCL Tech is something that we are keeping on our watch list. But again, Aisha, I think we'll wait out for the next few days, maybe a next week as well, to see how things settle down, at least on the political front.
Wait for the next week, perhaps the things to settle down. But as you talked about, one of the big events to watch for is, of course, the RBI Policy Committee meeting, which is underway right now. The verdict will be out tomorrow on that. Let me take it across to Snehi to get a sense as to what the expectations are, and then perhaps we can get Samiran as well as Tanvi to listen into what their views on the expectations are.
Well, yes, so the street is largely expecting that the MPC will be maintaining the repo rate to the levels that it is at right now. We're expecting no change in those levels as of now. The stance, however, is expected to remain at status quo. So the key factor to watch out over here is, will the withdrawal of accommodation stance change to a neutral this time around? That's going to be a key point to watch out for. Rate pause is expected to continue. Overall stance is expected to soften as well. Now, when you take a look at India's GDP trend, then quarter for FY23 we were at 6.1%, quarter for FY24 latest figures at 7.8%. Some good growth is being seen on the GDP front as well. GST collections are also looking largely stable. India's inflection trajectory is the one main metric to watch out for, because in June of 2023 we were at 4.8. We've reached levels as high as 7.4 in July of 2023, and as of now the latest inflation figures for April 2024 have tempered substantially to 4.83%, which means that the RBI's rate actions and everything that they have been doing so far in terms of policy moves has been working out. So now all eyes will be on the on the RBI and the MPC outcome to see what the next step is going ahead. experts say that stance change is likely in the August meeting, and this will be followed by a cut in the October meeting. This is what experts have to say, and rates are expected to stay elevated till inflation is above 4%. We're at 4.83%. The RBI targets to bring that down to 4% in the near future. Now, rate cuts will the rate cuts be delayed? And here are some key reasons to believe that this might be the case, because like I mentioned, GDP is resilient, there is momentum in domestic demand as of now, and focus is on the inflation target. This is as per experts, which also suggests that the RBI may not have to meddle with the rates as of now. And all eyes will be on RBI commentary, what they have to say in terms of GDP growth and trajectory, the forecast on inflation, the liquidity measures, and increase in the rupee volumes, and lastly, if there is any strategy change on the forex front. So, well, yes, all eyes will be on this very crucial MPC meet.
This combination of growth and inflation is probably telling them to stay on guard. On top of it, given that there is now some uncertainty on the fiscal outcome, they might want to see through it. They want to see through the monsoon situation as well before they can embark on the easing process. This is a policy where the MPC should be focusing more on risk minimization. There are some risks emerging, particularly on fiscal, bit of political uncertainty. In these kind of times, it's better to not rock the boat by doing major changes. So in that sense, the change of stance could more be an August policy discussion rather than in June.
Most of the focus will be retained. A lot of focus will be on the upcoming budget and the policy henceforth.
The focus maybe of the government could change on certain other sectors, social spending. How do you see that in terms of the policy then moving forward? Any change that we could expect?
Clearly, I think the political outcome was suggesting that there is kind of a weak sentiment at the lower end of the income pyramid. And, whether we accept it or not, but India has seen a K-shaped consumption recovery post the pandemic. So most of the high frequency data that we track are clearly indicating that affluent premium segment demand in India has been doing well, but demand for entry level mass market goods has remained muted. So maybe it is hinting you at some point that the income levels at the bottom end of the pyramid, which I think were the most affected, their income levels have not gained to the level where they start spending again. So I would say from a policy choice perspective, which I think will be one of the biggest focus for investors, will be whether the government, while adhering to the fiscal consolidation roadmap.
Okay, that's a whole bunch of views coming in, and of course the ET Now poll as to what economists and bankers are saying. What is it that we can anticipate from the MPC outcome tomorrow? But let's just look at some of the other buzzers. BHEL, of course, we've been flagging off, has been a big mover today on that order win, a sizable one at that, one of which is from Adani Power. IEX as well, the total monthly volumes have seen an uptick of about 29%. This has also been a big mover, although it's definitely come off from the top of the day. But Mayuresh, did you recommend buying Tuesday's fall in the market? And if so, what were the top names on your shopping list?
No, I think we were a little cautious. And again, I think, Aisha, as I have pointed out, I think what we ideally like now to see that over the next day or two, if the market stabilizes from the lows that we had made on Tuesday, we will get into a rally attempt, a phase that we term in markets within India as a good phase to start making your watch list. And therefore, I think as I put forth, I think in the next few days, if everything is sound on the political front, it seems to be sound on the political front, and the data points in the market are suggesting that we'll create a watch list. I think the watch list will primarily be among the domestic cyclicals itself. So cement would be a big theme as we see it. Stocks like Ultratech, as an example, would remain part of our watch list. BFSI would be a very, very interesting space as well. So top names like ICICI Bank within the private teams will definitely form part of our watch list. A few of the consumer discretionary stocks as well, because with good monsoons expected this time round, I think the second half in terms of an earnings trajectory should be equally good as well. So I think we'll just keep our fingers crossed over the next 3 to 4 days. I think if everything works well on all these counts and the market does not breach the lows made on Tuesday, I think this watch list may be put into an action.
Point taken, Mayuresh. On that note, we let you go, Aditya, as well as Kunal.
If If you like this video, then like, share and subscribe to ET Now.